Hello, and thank you for joining us for our first quarter 2026 investment update. So far, this year has been eventful. And if it feels like markets have been more volatile than usual, you're not wrong. But as always, our goal today is to separate the noise from what truly matters for your long-term financial plan. I'm Angela Palacios, Partner and Chief Investment Officer here at the Center for Financial Planning. Later, you will also hear from Nick Boguth, our Senior Portfolio Manager. Let's walk through what happened, what it means, and how we're thinking about it going forward. The first quarter reminded us of something we've seen many times before: volatility. It's a normal part of investing. Global headlines drove much of the market movement early this year. Geopolitical tensions, including conflict in the Middle East, elevated oil prices, and uncertainty around U.S. trade policy, all created short-term stress across markets. As a result, U.S. stocks declined modestly, with the S&P 500 down about 4% for the quarter. Bonds ended the quarter essentially flat. Commodities, especially oil and gold, moved sharply and sometimes in unexpected ways. While these moves can be uncomfortable, history consistently shows that geopolitical shocks create temporary market disruptions, not permanent damage for long-term investors. Periods like this can make investors feel an urge to do something: sell stocks, move to cash, buy what feels safest in the moment. But history reminds us that staying invested and diversified is often the better approach. Market pullbacks happen almost every year. In fact, the average intra-year market decline since 1950 has been over 13%. Yet despite those drawdowns, the market has finished positive about 3/4 of the time. Volatility is the price we pay for long-term growth, and avoiding that volatility often means missing the recovery that follows because they usually happen very closely together. One way we manage moments like this is through planning, not prediction. For clients who rely on their portfolios for income, we build liquidity into your plan well in advance of markets like this. That means having months or even years of spending already set aside in cash or lower risk investments, so you don't need to sell assets during market stress. For long-term investors still saving, periods like this can actually create a buying opportunity as valuations become more attractive. Different investors, different goals, one disciplined process.
Thanks, Angie. Now let's dive deeper into some other headlines from the past quarter. Interest rates played a big role. The Federal Reserve held short-term rates steady as it navigates stubborn inflation, a softening labor market, and the uncertainty created by higher energy prices. Markets swung quickly from expecting rate cuts to pricing in a possible rate hike, but we believe it's far too early to draw conclusions. Also, we may still feel the pain from 2022's bond market rout, but it's important to note that today's setup is completely different than it was in 2022. Yields are starting at a much higher level, meaning they are providing strong income to buffer returns if rates do continue to rise. A few additional themes worth noting. Artificial intelligence continues to drive innovation and opportunity, but not every company is benefiting equally. That dispersion is healthy and very different from prior bubble-like behavior. Private credit has made headlines as liquidity concerns surfaced. We continue to be cautious here, viewing these investments as appropriate only for select investors with long time horizons and limited liquidity needs. Gold surprised many investors, falling from 20% after reaching record highs. Another reminder that even safe haven assets can be volatile and unpredictable in the short term. In closing, the first quarter of 2026 has been noisy, but that is not unusual. Markets face uncertainty every year. What changes are the headlines, not the underlying principles to successful investing. A thoughtful financial plan, proper diversification, and a disciplined approach remain the most reliable tools for navigating uncertainty. If you have any questions about your portfolio, your financial plan or what today's markets mean for you personally, please don't hesitate to reach out. We are always here to help. Thank you for watching, and we'll see you next quarter.